So the current Bitcoin price is 19,667. So we are getting a little bit of volatility in the market, and we've reached into the exact zone that I'd outlined. So here is the high time frame outlook. Bitcoin is definitely in a very interesting place right now, where emotions are running really, really high within the market. So the great thing about the current price action is we have a very easy invalidation level. So it should be an emotionless trade. And I think you guys have tuned in at just the right time, because oftentimes the levels that are outlay only come into fruition when people are already asleep. But since you're all here, you've joined at exactly the right time. So will I turn to the dark side? Which way is the dark side? Is that up or down? Well, we'll have to see. This is a very short-term outlook that I'm looking at. But first, just touching on the high time frame chart over here, I can see something very specific that is happening at this level over here, and this is a retest of this gray box area, which I have mentioned before. Now I'm talking more high time frame, right? I have mentioned this before. I said that, look, there's not a lot of price action or time spent within these levels over here. I think it came to something around 6 weeks of price action, and that means that the more that area gets tested, the more likely it is to break down. Now, I am giving the bulls the benefit of the doubt in the very short-term time frame, and that is for a potential area to bounce off of. And I would look for a very short-term sort of bounce from these levels, which I'm going to show you when I go into the 4-hour chart in a second. And yeah, it's a difficult time to be going long emotionally. We all do know that we have the upcoming CPI print, which everybody is expecting to be negative, a bad print, higher than expectation, and therefore if history repeats every time we receive that, the market tends to dump into that. So we'll have to see. And then on Thursday we have the reports coming up with the jobs, and that combined with the inflation could be the next catalyst that we're looking at. So I posted this on my Twitter over here. For those of you who have been following along, welcome back, because I'm sure most of you have also been paying attention to this exact same chart. And this is the 4-hour chart that I've been having a look at, which essentially outlines a series of higher lows and higher highs that are attempting to be established. And right now we're coming right into that exact zone. So looking at what I posted on Twitter over here, just make sure that you follow me, because I will try and keep you up to date with everything and how it unfolds. But at the moment, since we're live, I can cover it all right here. So looking at the DXY, you can see it's pushing straight up into the dotted or dashed line over here. It has wicked directly off of that, which is pretty interesting. Look, I'm not going to try and fade this thing. The DXY is powerful. The dollar and the euro have once again reached parity, meaning that again it's 1-for-1 for the first time in many years. So it looks like it's on a major parabolic run, and from my experience, these things can always go much further than one anticipates. I want to see what the Bollinger Bands, put that onto a weekly chart. Monthly, you can see that it's already come outside the top end of those Bollinger Bands. When things are mega bullish, it tends to use these almost as support levels. I want to move it onto a weekly and see what that looks like with the Bollinger Bands. There you go, still testing the top side. Will this trend continue where it remains on the outside and kind of just bounces off? No point in even attempting to fade the DXY at the moment. Yes. Sorry about that, guys. I see you've had the music on the whole time. Looking at the stock market, we can see the pre-market is looking to open down. So there is a little bit more downside. I just want to quickly measure what that gap would be. 0.5%. Looking at the S&P 500, S&P 500 looks like it could potentially be turning back over. So again, look, guys, it all comes down to your risk to reward ratio. That's why I always recommend to enter as close to the point of invalidation as possible. Now, a lot of people may look at that and think to themselves, well, hey, look, every time you enter, you tend to get stopped out. But if you manage your risk and you enter let's say you entered right on that last price label at 19,025, it doesn't matter. You're only losing 0.95% on each trade. And I mentioned in today's newsletter, which you're welcome to subscribe to, the link is in the description below, but this is kind of what I'm looking at. Not much has changed based off of yesterday. This is a risky long in the sense that the majority of the risk still remains to the downside, but it's worth giving the benefit of the doubt because we have 1, 2, possibly 3 higher lows, 1, 2, and 3 higher highs in an ascending triangle, which has a probability of breaking to the upside, which would take you with a measured move to 25,400. So I'm still watching that. And if you look at the price action that's unfolding right now, you can see that the buying interest is entering in at this level because we're being left with this kind of these kind of wicks over here. So as long as there's no closes, if price starts to close underneath this level, let's say this candle over here closed over there, I would start to become increasingly cautious, and I might even pull this order off the books and wait for the last moment to see exactly what happens. Tighten your stop losses as well. Anytime though, if there's any wicks, I'm completely comfortable. By the way, I took that position on the horizontal. I took that position there as well on the diagonal. And my last position would be on a wick basis. As long as it's a wick that comes down into that level and it bounces off, I'm perfectly comfortable with entering still. So I'm not taking heavy leverage trades or anything, just looking at 3 to 5x leverage. Currently, this one is at a 3x. This one's at a 3x. This order that's already set at 19,025, I've put at a 5x leverage. So I've managed my risk. I'm in to only lose 3% of my trading capital that I've allocated to this trade if it goes wrong. Now, speaking of it going wrong, what would that look like? I mean, you definitely want to have your stop losses set, but if it does fail through this, I would expect that price would probably rapidly accelerate into the range low. It may bounce, then retest this as underside resistance and fall through that level, and then I'm going to be targeting much lower. Look, then we're in big trouble. Then I would say the stock market is going to turn over and make new lows, and so is crypto. So just remain patient. At the moment, of course, you do have the moving averages that are all crossing back to the downside, with the short below the medium below the long term. But there is one crypto that I am looking at, which has had a lot of FUD actually lately. It had a big sell-off, and that's on UniSwap. And UniSwap is actually also still in the zone. It's one that we identified in the last couple of days as having relative strength against the rest of the market. And you can see the same thing. You got the higher lows. The what's better about this coin's outlook in comparison to Bitcoin is the posture of the EMAs. You have the golden cross over here where the 50 has crossed above the light blue, and you have the yellow tracking above that as well. So if this higher low, can confirm over here, you'd be looking for something like this, a bounce off of that, setting your next higher high, and that would leave all the moving averages postured and angled upwards, which is setting up for a fantastic bullish situation. If Bitcoin is able to turn bullish and meet our targets, again, I want to re-emphasize, guys, this is a short-term trade, meaning the bullish scenario is only taking you to about $23,000 to $26,000, and then I would be re-evaluating there. But on something like UniSwap, you can probably expect a factor of 2 to 3 times the move that Bitcoin's giving you, meaning if Bitcoin's going to move 30%, UniSwap could potentially move as high as 90%. So manage your risk. I put my stop loss underneath the 200 EMA over here. And some of you may be wondering, why is it that on Bitcoin, I put my stop loss under the lower highs over here and not under the EMA? Well, to answer that question, essentially, it's because the distance between that EMA and the previous higher lows is 12%. That's too much risk to take on. You can't move the stop loss over here and enter up there. You need to have a different invalidation level. So I've put my invalidation level underneath the previous wick over here, as well as under the EMA, to give it a little bit of leg room. I don't want to see any more wicks come down here, especially if you have a closing candle. If you see any candles start to close outside of this diagonal trend line that is currently being respected and held, then I'd probably cut the long position. And that's essentially what I'm looking at. Let's have a look at the MACD as well on a Bitcoin. You can see on the 3-day it is attempting to cross back upwards. You are coming onto a primary horizontal area. So I always find it interesting in the markets, the sentiment that right when people should be getting bearish at resistance, they uber bullish, and right when you should be getting bullish at support, they start to turn completely bearish. And that's exactly what you're seeing right now. This is actually one of the few times that we have a lot of confluence or areas that match up as a support region. So 3 days attempting to cross up. Let's have a look at the daily. Daily has already crossed up, but if this doesn't continue on, the histogram doesn't strengthen, it will be turning back down. I want to look at the 12-hour and then at the 4-hour and see what that's doing. 12-hour is just crossing down, and then that's the 8-hour. Let's go to the 4-hour, see what the 4-hour is doing. 4-hour has crossed down on the MACD, but these are lagging indicators. So I'm trying to catch swing moves based off of the 3-day. I figure the 4-hour price action chart and the 3-day momentum oscillators are something that seem to match up quite nicely in my experience. Looking over here at the daily, we have the all important again, 34 EMA. I will be watching that if we do get the bounce as an area to clear. So we have run into this as resistance quite a few times. I'm hoping that if this time we start establishing a trend of 3 higher highs and 3 higher lows, the next time may give us a chance to actually smash through that, break that as resistance, as well as the diagonal that's been governing the lower highs throughout. So that's kind of the situation. Look, if we start to lose this price level over here, we could rapidly accelerate anywhere between about $12,000 and $16,000. We need to reevaluate and see what the stock market is doing. Okay, looking at the 1-hour chart over here.
Check the DXY, right?
We'll look at the DXY now. Looking at Bitcoin on the 1-hour chart over here, you can see it is again also attempting to bounce off of that diagonal, which is one that matches up. Okay, everyone's saying the DXY is dumping. Let's quickly go to it and see. Okay, it is pulling back off of that area, but look, it's not something that I'm going to try and fade, because I thought I was very clever earlier on in the week by saying, like, on the 3-day, it was showing signs of weakness and looked like it may come back 2%, and then it continued to rally. So I think the DXY is something better to try find weakness on a weekly chart. It's macro. This thing is super bullish. I do expect something like this to happen, which is the wicks into that dash line over there. The dash line is based off of key monthly and quarterly levels that are mapped out historically. So this is no surprise to me, but I do think over time it's probably going to smash through that, and then it'll start to head up to the next level. So guys, pretty much that is really it. There's not too much to say based off of yesterday. If you enjoy this short content, I try to keep the alpha up high and just give you exactly what you need to carry you through the day. Please make sure then that you do hit the like button below, subscribe, hit the bell notification as well. And then for those of you who are US citizens, you are able to get, well, anybody can get this. You don't have to be US, but we have a Bitget referral link over here. You're getting up to $8,000 in sign-up bonuses. If you do decide to use that as a US citizen, you don't have to have a VPN or anything. It's completely legal for US citizens, and you don't have to be KYC'd. BYBIT one is below as well. You have the newsletter sign-up link over there as well, so make sure that you sign up to that if you want to find out in a text version my exact thoughts on the market with exact price levels as well. And guys, that is pretty much it from me. Thank you once again for your time. I do appreciate it. I'll keep you up to date on Twitter. And then yesterday, one more thing I wanted to touch on. Yesterday, I dropped a video, which educational content on never losing another trade. Essentially, it's a dollar cost average strategy. Go have a look on the Crypto Shorts channel. It's surprisingly interesting how successful you can be using those strategies. And I believe that every single one of you should watch that video. So that's it from me. Have a absolutely stellar day. Until next time, I'll see you all on the next video. Cheers for now.